Hello everyone. Thanks for tuning into Indian Markets Unveiled. Here we discuss the long and short of key things that one needs to understand for the trading session. To start with the global market cues, Wall Street closed sharply lower during Tuesday's trading session as US 10-year bond yield reached 16-year high at 4.8%, post the hotter than expected jobs opening data, which came at 9.6 million versus expectation of 8.8 million new jobs, indicating more upside risk for US inflation as the labor market remains strong, which might lead the Fed to keep the interest rates higher for too longer. The fears of higher rates and the jump in bond yield post the release of job data triggered sharp sell-off in the US markets, with tech-heavy Nasdaq closing around 1.8% on the downside and value index Dow Jones closing around 1% on the lower side. On the currency front, the dollar index continued to remain elevated at 107, and the stronger dollar is putting pressure on emerging market currencies, including Indian currency as well. Coming on to the Asian markets, the Asian market is also trading largely into red during Wednesday morning on account of weak handover coming from the mother market, that is the US market. The Japanese market benchmark Nikkei is trading in red with sharp cuts of around 2% since the morning as the Japanese currency yen came under pressure against stronger dollar. However, it covered some points this morning. The Hong Kong market is also trading weak with a cut of around 1%, and Kospi is also trading sharply lower this morning with a cut of around 2%. So the clear-cut indication from the global cues are weak this morning. So let's take a look at what happens to the domestic markets. The Indian market started the October month, in fact, with the negative bias. The benchmark index Nifty 50 ended lower on Tuesday, that is yesterday, with a cut of around 0.5% aided by a weak move coming from Bank Nifty, which ended almost 185 points lower. In terms of sectoral movers, Nifty Auto Index fell around 1% with mixed set of September auto sales number, while Nifty PSU Bank was the top gainer during Tuesday's session. Also during the Tuesday's session, FIs sold around 2,034 crores, while DIs bought around 1,361 crores. So clearly, there is no support coming in from FIs as selling in the cash market continues, while the domestic, that is the DIs, are trying to support the markets with around a buy of 1,361 crore. So that explains that the handover from Tuesday's session for domestic market was weak, and then eventual impact was seen in the morning session while the markets opened up today. For the Wednesday's session, Indian market is indicating a weak start aided by negative global market sentiment as well as the handover we got from the last session. Nifty IT might trade under pressure given sharp sell-off seen in the US tech-heavy index Nasdaq. The benchmark index Nifty 50 started sharply lower with a cut of around 146%, being dragged by Bank Nifty with a cut of around 1%. On the sectoral front, Nifty Auto continues to be a top loser with a cut of around 1%, while Nifty FMCG continues to be top sectoral gainer, trading with an uptick of around 0.5%. In terms of the movers of the day, NTPC, Maruti and Axis Bank are top losers for the day, trading with more than 1% cut, while Nestle, Adani Enterprises and Hindustan Unilever are the top gainers as of now. So this is the crux of the global markets, which are weak, the domestic market which started on a weak front, as well as the FIs and DIs participation into the markets. However, along with the global cues, Indian equity investors should also keep an eye on RBI Monetary Policy Committee meeting, which is due on 6th of October, and the RBI is expected to keep the interest rate unchanged at 6.5%, but it is likely to keep the commentary a bit hawkish in the background. However, along with the global cues and the domestic cues, Indian equity investors should also keep their eyes on RBI Monetary Policy Committee meeting, which is due on 6th of October, and the RBI is expected to keep the interest rate unchanged at 6.5%. But it is likely to keep the commentary a bit hawkish. In the background, global macroeconomic headwinds coupled with higher Brent crude oil prices, which is trading at around $90 per barrel. So that is what the overall scenario of the markets look like. But coming on to the stock-specific news, we have a lot of stocks which are running around on the back of news. To start with, private sector lender IDFC First Bank launched a QIP, that is Qualified Institutional Placement, to raise funds of around 3,000 crore. Another stock in news is Avenue Supermarts Limited, as the company posted its business update and saw a significant 19% increase in revenue, reaching at 12,307 crore compared to 10,385 crore in the previous year. However, the net profit for the June quarter only rose by 2.3% on a year-on-year basis, reaching a 695 crore from 680 crore in the same period last year. The next news is coming in from Maruti Suzuki India, as the company has received draft assessment order for FY20. In the said order, certain additions or disallowances amounting to 2,160 crore with respect to returned income have been proposed. The company will file its objections before the dispute resolution panel. Another stock which is doing rounds on the back of news is HDFC Bank, as the company announces leadership changes with Arvind Kapil leading mortgage business and Arvind Vohra heading retail assets. Parag Rao takes on marketing and liability products, and new heads appointed for retail branch banking. One needs to keep an eye on Rail Vikas Nigam Limited, as the stock is constantly in focus on the back of order wins, and the recent one is that the company has secured the Himachal Pradesh State Electricity Board project at 444 crore, aiming to develop distribution infrastructure and reduce losses under the 24-month timeline. And with this, we come to the wrap of Indian Markets Unveiled for today's session. However, as the markets are clouded with uncertainty and awaiting major events ahead, investors are warranted to exercise caution in the broader market segment, especially in the mid-cap and small-cap basket. As the market dynamics are changing in the background of global market headwinds, investors should focus more on companies with strong fundamentals coupled with reasonable valuation. However, in all of these scenarios, research is the backbone of successful portfolio creation. Wealth creation is an art we understand. We at Deven Choksi have our exclusive research services, which is powerful and successful. Our research service has a success ratio worth having a look at. To avail our exclusive services, we invite you to join us. Just click on the link below and that's it. Fill in your basic details and our team will reach out to you. Let us together explore the world of wealth creation. Thank you.